With a 51% growth in sustainable and ethically themed investment in 2013 to 2014 and an estimated $25 billion in assets under management, SRIs have seen a surge in performance and member activism. Broad responsible investments have grown 13% to $153.1 billion, and from the $1,070 billion that Australia currently has in total assets under management, core responsible investment portfolios now account for 2.34%, and broad responsible investment portfolios represent 14.3% of those total assets. Two funds, AustralianEthical, Australia's largest ethical super fund with $1.1 billion in funds under management, and Crescent Wealth, the world's first private Islamic-based fund, have been bred into this market of transparency, solid returns, and public demand. But what is ethical investing, and why has it seen such a rise? AustralianEthical Managing Director Phil Vernon believes that the fund's strong investment philosophy resonates with its members.
AustralianEthical's overall investment philosophy is based around a few core principles. Firstly, investment and corporate markets are one of the most dominant influences on the future of our planet, and so we have an enormous responsibility, and we need to take that responsibility seriously. But secondly, we can do that without compromising returns. So we're taking environmental and social considerations into account are as important as financial returns, but one doesn't need to compromise for the other. Both can be achieved, and our track record proves that.
In a recent Mercer Performance League analysis, 4 out of AustralianEthical's 7 super options were recorded in the top quartile, with its small companies options ranked first over 1, 7 and 10 years. It had a first-year performance of 15.9% compared to the second-ranked fund of 9.9% and the median of 4.8%. The fund's My Super option ranked third out of 168. Unlike AustralianEthical, Crescent Wealth's philosophies are dictated by religious ideals, but its foundation is what the fund's Director of Corporate Strategy and Development, Omar Khan, says will generate long-term positive growth.
I think Islamic investment philosophy is very much suited to long-term value investing, and hence I think it very much aligns with your typical member or client's needs for saving for their retirement. As you know very well, superannuations are all about long-term investing, so there's a great marriage between the two.
Both funds have a rigorous screening process, choosing not to invest in companies that are involved with gambling, alcohol, tobacco, weapons, and logging, while exploring ways to invest in education, clean energy, and medical solutions.
But in addition, we have a key twist as well. So we don't invest in conventional financial services. So typically the big 4 banks or insurance companies or funds managed firms are out for us in terms of our investment universe.
The positive results for SRIs that foster innovation without compromising the environment or social concerns and take into account the views and opinions of their members is seeing the left of centre funds slowly become the norm.
A lot of funds are actually incorporating the principles or recognising that the principles can help them identify risks and opportunities within their investment process. There's a bit of a range of the extent to which funds do actually incorporate the principles. There is an increasing demand, I think, from consumers, from investors, that process has a bit more rigour. So ultimately, I think that it will just ultimately become the norm. And to be honest, we would love it if the entire world invested the way that we invested. I think the world would be a much better place if it did.